wage inflation is slowing down, which means wage growth is not keeping up with our inflation rate, and we're being constricted by the real interest rate.
Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate. So let's get started. Here's your host, Kevin Perenio.
Hey, it's KP coming to you live from Anaheim. Let's go. We got a bunch of brokers here. We got Title Peeps. We got Noble Funding, eMortgage Capital, AIM, the Association of Independent Mortgage Experts, just had their road show they do. This is at the Golden Brewing Company. You see they're promoting, I know it's backwards, they're promoting their AIM Fuse, which is September 12th in New Orleans. It'll be awesome. I'll be there. So we are right by the Angel Stadium, Golden Road Brewing. It's a local brewery. Let me give you a little love here. So that right there is the A and the halo. Can't quite see it, but it's really pretty out here. There's mountains in the background. It's golden hour. Anyway, okay, let me get to it. So Fed said in December they're going to cut 3 times. And then the last dot plot, they said 1, maybe 2. Now we had one report from the CPI. Now everyone's back to they're cutting in September. Would it be crazy if they cut 3 times this year? And, the markets are pricing in 7 cuts all the way through the end of next year. That might be a little high. So, everyone's in the moment all the time. I mean, geez, I know I put out a video, by the way, about the assassination attempt on Trump, right after it happened. And, after, he survived and all the aftermath, now, pollsters are giving him a 70% chance to win or 65%. So, data and stats and everything, it's always about like that moment. And there's a lot of runway left between, obviously the Fed's meeting this month in September, through next year, the election. Anyway, just glad we didn't have worse of a disaster. Prayers go out to, I think it was firefighter Corey. He was 50 years old, shielding his daughters, and was shot, unfortunately. And there are 2 other critically injured. But of course, very tragic event. But one thing I've learned in life is, man, life just marches on and just rolls on, and it's crazy. Death's part of life. Like 50 said, death got to be easy because life is hard. It'll leave you physically, mentally, and emotionally scarred. Okay, retail sales is out tomorrow. There's a projection, I believe, of negative 0.2% on that, which, slowing economy is not good for, obviously for certain companies. It's good for mortgage rates. And so it's a pretty big data read tomorrow. It's not as big as a CPI, but it's definitely big. So I would, get your locks ready to go. If you have a surprise upside, you might see, if it's a positive retail sales report, you might actually see interest rates get worse tomorrow. So keep an eye on that. It's an early morning report. Earnings season has started. Wells Fargo, Citibank, and JP Morgan Chase kicked off in earnest the earnings season. The financials usually report first, and they're the big 3 financials, all beat on top line and bottom line by analysts. And actually, they kind of set the tone for earnings season. So some analysts have actually revised up, revenue growth at about 8. They went from 8.3 to 8.6%, and I believe they went from 4.6 up to 4.8% of revenue. Earnings beat. So there's top line revenue, then earnings, net, right? So analysts have revised up already. We're only a weekend to, not even just a few days into earnings season. So let's keep an eye on that. It definitely impacts, the flow of money, people's jobs. And I want to say one thing. Chairman Powell has been speaking today, and he reiterated, the variable and lag effects of the Fed funds rate. And what that means is you don't really know how higher for longer interest rates are going to impact people, and when. But we know that it continues to lag. And so even if they started cutting tomorrow, the Fed funds rates are still high. And, money's not cheap right now. And that hurts people in various ways, variable ways. And there's a lag effect. We could see the effects of these high rates for the next 6 to 8, maybe 12 months, even after the Fed starts cutting the rates. So, we'll have to keep an eye on that. Wage inflation is slowing down, which means wage growth is not keeping up with our inflation rate. And we're being constricted by the real interest rate, which every time inflation goes down, okay, the real rates, okay, you take the Fed funds rate, let's just say, 5.25 to 5.5, right? You use 5.375 in the middle. If the inflation rate goes, from 3 down to 2.375, that's great. Inflation's slowing. It's growing at a slower pace. That's disinflation. But that's also now you've gone from, 2 and 5/8 to 3% real rates. And that can be very crushing on people getting credit card debt, car loans, anything running their business or whatever. So the real rate is crushing. The Fed knows it. There's a lot of doves on the board. I don't think they're going to cut in this month, but I do see it in the cards in September. Rates will react to whatever they react to. We got a lot going on. Thanks for tuning in, and I appreciate all the engagement on the post here I put about the assassination attempt on Saturday, and of course, the civil discourse has been great. There's some things some people are writing, but not on my post. So thank you for being professional. I know it's a very touchy subject. Okay, cheers. Hey, it's KP and Jason coming to you live from Atlanta.
It's unbelievable.
Okay, you guys are going to love this. This is amazing. So I happen to know this guy. I do, but he's not supposed to be in this room, just saying. So you know what? If you can move me, no, actually move him because I'm already unpacked. Yeah.
Oh, so you're unpacked,
Yeah, I've been here for like 3 hours. Yeah. Okay, thank you. All right. She's going to meet you by the other. So if you guys don't know, Jason is the Chief Operations Officer of Movement Mortgage. We're here for a SnapDocs event. They're about to roll down to. They're coming to get you. So
almost landed in Birmingham.
I was sitting here. So this is awesome because everyone on LinkedIn is like, this is like what we do. So I was just sitting here. I was just about to leave my room and go down to happy hour. And the TV just popped on and it said, "Welcome, Jason." And so I get on the phone immediately, and the lady's like, "Oh, the lady this morning who upgraded your room, she didn't put the new room number." And anyway, so then I hear the door opening, and it's my boy. So good to see you. You too, man. All right, I'm actually do my video for real right now.
You're going to do it?
Yeah, like so walk down. Yeah, I'll see you downstairs. Yeah. Here.
I gotta wait for the lady.
Okay. All right. Well, then I'll stay here. I'll see you down there. All right. Bye. That was awesome. Okay. So this might be the best intro ever for one of my LinkedIn videos. I thank God I knew Jason. I was like, "Jason," and I jumped up and gave him a big like I really jumped into his arms, just like to be kind of funny. Anyway, all right. So what's going on in the world? Last Word is out tomorrow. It's right at the same time as the SnapDocs event, so I'm going to be chiming in. But we have an amazing guest, Christy Sukamet. She's wonderful. She's over there running mortgage and lending for University Federal Credit Union out of Austin, Texas, which I went to UT, ironically enough. And I've got, I have my very first checking account. I opened my freshman semester right there. What you got, buddy? Yeah, don't let you. It's right
Yeah,
there. And your key.
Next to my keys.
Yeah.
These keys are
Yeah. No, those are your keys.
to this room.
I'll see you later, bro. Later. All right. So, so Christy is going to help step in where I won't be able to be there the entire 30 minutes for Last Word. We didn't want to change the time. We want to keep the time cadence right. So I'll be there for part of it. I'll be at this other event. So thank you, Christy. And of course, Brian View, my partner over there. All right. So what's going on today? I thought it was very interesting that, we talked about retail sales on Monday, and there hasn't been a whole lot of news this week. I mean, jobless claims rising this week, which is a leading indicator for more weakness in the economy, is kind of moving mortgage rates today. And so I'll just talk about that real quick, and then I want to talk about the stock market. What the heck is going on? It's selling off like crazy. I'm not a financial advisor. I'm not responsible for your losses, only your profits. And you're going to want to listen to this if you're invested in the stock market. Kind of a tough day. So look, when the Fed came out in December and said we're going to have 3 cuts because inflation was tracking how they wanted it to, but there was still not weakness in the labor market. And that weakness needed to be there, especially with wage inflation. So wage inflation is slowing a little bit. It's certainly not keeping up. It's not decreasing so much that people are dying out there, but there are more job losses, and there's an elevated number of people that are unemployed. We see the unemployment rate at 4.1%. And so in the first quarter, the economy just wasn't weak enough yet for the projected rate cutting and lower rates that would bring back liquidity to the economy, to stave off a rebound in inflation. And we saw that in the first quarter. And then the economy continued to weaken because of higher for longer rates. And now that weakness is at a point low enough to where the Fed is really getting their head around cutting rates. Labor is a big part of that. So we'll continue to keep an eye on that. Labor is much weaker now than it was in the first quarter and, of course, in December. 10-year Treasury is like at 420, 418, 415. I mean, these are decent rates. I mean, it's the lowest rates have been in 5 months. Last Thursday during the CPI print, the second largest single-day drop improvement in rates of the year. And the trend is your friend, so don't fight the Fed. Okay, let's talk about the stock market. It's been a crazy run, right? And so money flows around the stock market just like it does in our business and looks for things to invest in, things that look promising, things that had yield, companies that have power and staying power and operating leverage. So the semiconductor plant construct has been running like ripping. I mean, it's like 60% of all the gains in the S&P this year is like from semiconductors. So making chips for AI. NVIDIA is the lead designer. Taiwan Semiconductor is the lead fabrication plant in Taiwan, by the way. So there's a threat there from China. So there's a lot of other great semiconductor companies. But you want to talk about the political commentary as we lead up to the election and whether policy has consequences. Just in the last couple days, okay? So couple comments, right? So former President Trump, made a comment about Taiwan and its relation to China and kind of being tough. And then President Biden, the current administration said, and I don't know if it's political, bluster or if it's an actual policy, they said they want to curb exports of semiconductors to China. Those two candidates' comments wiped out $500 billion of market cap in the stock market in like 48 hours. I want you to think about that. That's $500 billion. Okay. We talk about, our debt and our Fed's balance sheet. The Fed's balance sheet's like, just under 7 trillion, around 7 trillion. $500 billion was wiped out from semiconductor stock in just 2 days. So there's a lot of money in the system. Words have powerful meanings, and so it's not just a bunch of BS politics. I mean, there are consequences for what our candidates say. So the stock market's been ripping for certainly all year long, and even towards the end of last year. It's healthy for the stock market and people to take profits of financial institutions, tech companies, the Magnificent Seven. I talk about them all the time. NVIDIA, like Warren Buffett said, buy the F and dip, right? So, how long will this dip go? I don't know. But if you're a long-term holder and you've been sitting on the sidelines waiting, might be a good buying opportunity if we see this correction go even deeper than it is and maybe further into the next couple months. There's certainly a lot of volatility and uncertainty going into an election during all election years. Typically when the stock market is selling off or getting worse because of that kind of uncertainty or a slowing economy or when's the Fed going to cut? I mean, God, what would happen if the Fed didn't actually cut in September now? It's totally baked in the market. That would be an instant sell-off on that September, I believe, 18th meeting. And so, but those just provide buying opportunities, especially if you're a long-term holder. Typically in a year when there is sell-offs in the stock market going into like the fall, usually, right before Christmas, around Christmas, things start to shore up. They call it a Santa Claus rally, but really it's like people dressing up their portfolios to get some wins on some stocks that can go up by December 31st. So when they send the statement to you at your house, your 401k looks better, your mutual funds look better, your whatever your investment accounts, they look better with your wealth advisor. So something to think about. Again, it's hard to time the market. If you have a longer term buying horizon, maybe it's a good time to get in. So that's a lot that's going on. There's a flow of money. It's a big deal. When the Fed starts cutting, there'll be more money in the system. There'll be more money flowing. I'll get back. Next week's a lot of data coming out, of course, and we're coming up on the end of July here in just a couple weeks. By the way, they fixed the room. We're back. We're back in officially. This is Kevin. My key doesn't work. Y'all have a fantastic weekend. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.